Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. And we saw, by the end of the day, we were still down for the day, but you do see the tail forming down here. There was some buying that did come back into the markets. The blue line, as you see here, holding nicely on the way down, this blue line has changed since yesterday. I want you all to know. Trend lines were meant to be drawn with or I should say, they were not meant to be drawn with a fine point pencil. They were meant to be drawn with a crayon. So you have to give them a little bit of latitude one way or the other. In this case, I just went ahead and changed it ever so slightly to fit what I feel is a better indication of where we are in the markets, and that is, I think, holding this blue line. So we came below it. Notice how we got right back down here in the 9,600 level before seeing a bounce in the markets. The buying, though, was not necessarily strong. Okay, so it's not like we got a ton of buying pressure coming in during this little bounce, which doesn't bode well for the bulls. And unless we get, kind of back up and over that 9,800 area, I'm not real convinced that we're in for anything else, but still maybe even a little bit more downside action. I thought maybe we'd see a bounce coming into July 4th. Is still very possible. Tomorrow's Friday. It's a 3-day weekend. Still may see that. But at this point, I'm still not going to certainly give my bias to anything but the bears, if anything. I'm a little bit more neutral to bearish right down in here, just because we're so stretched. That's all. Otherwise, I'd be fully bearish at this point. But I'll say neutral to bearish right down in this area. As long as this blue line holds, bulls still stand some sort of a fighting chance. This is on the daily itself. If I go back here and show you the 60-minute, you can just see the bleeding continues. Here's that overhead 9,800 area that we never got up and above. But even above that, we've still got some work to do. I might have to fix that blue line. I don't like that blue line that much either. But up and above the 20-period moving average, before I'd even start thinking about trying to take a long on any of the indices, especially the Dow here in this situation. NASDAQ on a 60-minute also bouncing up and then consolidating. Looks like it wants to push up a little bit higher, but I would watch this area for your overhead resistance at this point. Right around the 1750-ish area on the 60-minute chart. From a daily standpoint, you can see us putting in a very big tail down here. Once again, not convinced it was enormous buying pressure coming in. I just think there's a lot of support down here at the 1700 area, and that was our initial bounce. So we are very stretched. This does make for a very nice candle in a very nice spot. I will give you that. This is more or less a hammer candle, a little bit more of an upper wick than I like to see, but whatever. Not going to splice hairs here on the deal. It is sitting right on top of support. And we have the long tail with it. So I like the look of this particular candle. I like where it's at. Now we need what? Confirmation. So we got to get back up and over about 1750-ish for me to start looking seriously at the NASDAQ for a bounce or a long play of any sort. I do like the NASDAQ. If you're going to play anything to the long side, always have. But that'll be up to you and your particular trading rules. The NASDAQ on a weekly, 1734 is the 200-week moving average. 1734 is where we close today. So logically, a move back up would be good for the bulls. Getting back up into that 1750 plus area tomorrow would be very good. Certainly would be useful from a bullish standpoint, and to hold without closing below this 200 week would be huge. At least some sliver of hope left for the bulls at this chance, or at this juncture, if we can get back up and over here. So SPX on a 60-minute, you can see us bouncing here, doing the same thing the NASDAQ did, bounce, kind of a consolidation. This is ultimately kind of a high base formation right here. Looks like it wants to push higher. That would take us back into the 1036-ish area. I'm not real serious about this till we're up over 1050. So there's still quite a bit of overhead resistance here, and the trend is still relatively strong. Not quite as strong as it has been the last couple days, but okay. Putting in that hammerish candle that we saw in the rest of the indices, taking a bounce off about the 1010 area. A lot of people looking at the 1000 area today. That was my area as well. Anything below 1000 I think is 970, 980-ish. I think I have some support down in that area. But ultimately, you can see us just continuing to move down. So the hammer candle's at the right place at the right time, doing almost all of the right things that I like to see, but not quite. So, looking for confirmation tomorrow. I really on the SPX guys aren't even really serious about anything until we get back up and over about that 1050-ish area. From a weekly standpoint, you can see us down here at 1027, that 1050 area, or at least back up to 1035, 1040 would keep us above this stronger support line here. I find good support, or in this case now, potential resistance, at the 1030 and right around the 1020-ish areas. Those will be your areas to watch now going forward. You can see where we got stuck in between that area for quite a while today, and then closing right around the 1030 area, 1022 to 1030 is where I see a lot of that support slash resistance. VIX on a daily, kind of stuck in between two. Now, this could be a leading indicator.